Morning, everybody. It's 8:31 on Monday, beginning of a new week, beginning of a very ugly day in uh, assets. I'm going to say assets instead of stocks because stocks are really only part of it. Asia and European markets are both lower, and I was just listening to that asshole, um, Jared Bernstein, talking about how the Biden administration is, going to solve all these problems. They need to cut inflation in energy and cut inflation at um, labor costs and cut inflation on food. They can do none of those things. Um, and frankly, he's just another politician. He worked for him when he was vice president, so now he's working for him now that he's president. He didn't do a good job then. He's not doing a good job now. Okay, individual stocks. We have Ford selling a piece of its Rivian stake. When they reported that huge gain, not this past quarter, but the quarter before, on the increase in Rivian, um, you know, it was kind of interesting. Um, Dishonest, but interesting. So now, in this last quarter that they just reported, they had to take a pretty big hit on Rivian, and now they're selling a piece of it. So Rivian is down. Let's remember that this was $179 stock, currently selling for 23.41, down about 5.5 or 18%. So, you look in the grand scheme of things, stock's gone from 180 to $23. Ford, on the other hand, is only down 43 cents or 3% at 13.78. Palantir with a miss, another one, $45 stock, currently trading $8.18, down 130. Besides their miss, they also had particularly poor guidance going forward. We have Duke Energy reporting a slight miss, but no action there, down 32 cents. And Tyson, which had a horrendous week last week, but they did beat. The stock is 93.10 up 228, so that's a little better. Um, Technically speaking, the SPY, the S&P ETF, has broken the February 24th low. Pardon me, they've broken last Monday's low. The only thing that hasn't broken the low is the Dow, and that's the low going all the way back to February 24th. And that low in February, let's see, currently we're 33,000, uh, 33,000 and small change. Let me see if I can get it for you. Um, the Dow is 32. I'm sorry, 32,899. That February 24th low is 32,272. So we're still about 600 points away from that. But in this market, where the futures are showing an opening of down 429, that's not so far away. We have oil down, gas down, heating oil down, nat gas slightly higher. We have gold down 16. It has been down as much as almost 30. We have silver down 50 cents. We have copper down almost 13 cents. I really like the silver and the copper down here. These are areas where there is huge support. And if you looked at my copper chart in last night's commentary in the weekly letter, you'd see that we are at the bottom of the Bollinger Bands on this, and really right into the support that has held it since the break to the upside. As you can see, we are at that on the daily. I think the weekly is a little bit better to see. As you can see, we're down here. We're also down in this area from where we broke out the last time. So I'm thinking that the copper is probably a buy here, and when we get a little bit of a blow off in the markets, I think that that'll be one of the places that will want to go. The EV market and the charging market. I mean, these are huge uses of copper, and on a year-over-year basis, we are in fact at a deficit in copper production. Bonds down another 20-30 seconds, 5/8 of a point, so over a half. Bitcoin down almost 3,000. Ethereum down almost 300, and the dollar, which was up a little before, is now down. We got to a new high of 104.21, now 103.59. So that's a fairly big return, down the 50 cents off the high. I still am going with the idea that somebody has blown up. We just don't know who or why. In listening to what Dale put up in the Discord room this weekend, Josh Brown's The Compound, he made the point of saying that junk bonds are acting better than U.S. government guaranteed treasuries, which is about as unusual as it gets. So I'm going to guess that it's going to be a blow up based on somebody being hugely over levered in the treasury market. All right, everyone, I'll be back later. Be careful out